Welcome back, you lovely people. So I left for a few days, went offline, came back to find that you had broken the market. So that teaches me for stepping away. I won't be doing that again until the cycle peak. So let's check out what is going on and try and diagnose the situation and figure out where we go next. Bitcoin is down 8% at $55,000. Not the whole story, because earlier today we were down 14%, down at 51,000. Right, so we have had a trend line that we've been watching for a while, and the close before was perfectly into that line and that support level, which was just under $60,000, and everything looked primed to bounce off of there and make our next leg up. And of course, as we all know by now, we've had a sharp correction today. I'm not going to go into the theories of why, because there are many people on YouTube covering that, but the ones that make sense for me is probably some sort of confluence of factors. Number one, lots of people overly leveraged, thinking that we're heading straight up to $80,000. Number two, there was rumors circulating that the US regulators are targeting some companies for money laundering using cryptos. Number three, India banning crypto, as they have been doing on and off for years. And then with the fact that many people are deeply in profit when they start to see these stories, then lots of profit taking place, and that can lead to a death spiral of selling, resulting in a really sharp wick down like we've had today. Is this anything that I am concerned about and that we need to worry about? Well, my my best guide is always what happened in the last cycle. And if we head over to 2017, this is around the time we've been watching. We've been coming off of this 15% pullback here. It was 18% in the last cycle. And we were looking at heading up towards a new all-time high of about 90 to 95,000. That was our base case for the next leg. And what I found very interesting is that within that journey in 2017, we had this short, sharp correction, which was 3 days long and was just under 33%. Looking at the news from that time, this was simply down to profit taking because we'd gone up so quickly. And what it looks like to me is that we have just done that a little earlier. Last time it happens, perhaps after another 10, 15% or so. And it was due to these external factors, these external news events creating that panic. As I've said before, external events can certainly impact the price in the short term, as we saw here when we're heading up past 50,000. This was on the back of Elon Musk and Tesla buying Bitcoin and him tweeting a lot about Bitcoin. And then what happened is we corrected back into our path. What am I expecting this time? I think my base case from this point is that this was our correction, because if it goes on now for multiple days, then that would be a surprise, given that we've already had really 1, 2, 3, 4, 5 down days, particularly the last 3. So if it did carry on for many more days, then it wouldn't be this sort of flash crash that we saw in 2017. But my base case still is that we follow a similar path to 2017. If we do bounce from here, and we have already bounced off nice support, and if we do bounce from here, this will look very, very similar to 2017. Now, that's journey A that we could take. Could this turn into a deeper correction? Well, it absolutely could, because generally we are ahead of where we expected to be at this point. And could this turn into what we were expecting to happen a bit later, which is this long, deep correction of about, this was just under 40%. If we had the first couple of days of this, yeah, that is certainly possible as well. So that remains on the table. That would be probably option B at this point. So we need to be ready for this to go down another 20% or so. And we need to be ready for it to be drawn out over a number of weeks. The reason that is not my primary thesis at the moment is because I haven't seen us having some crazy moves to the upside that would indicate that we're ready to take that long sustained correction. You know, we had one big candle into this sell-off, which was 6%. But what you normally see before that local top, which it would be, is multiple 6, 7, 8, 9, 10 plus % days in a row. And we just haven't seen that yet. So I don't believe we are at that point. And option C is that we have another short, sharp sell-off probably tomorrow, and we do head down to that 30% level, just like 2017. That would take us into $45,000 or so, and we need to be prepared for that as well. So option A, the bottom is in and we bounce from here, most likely. Option B, this is the beginning of a long sustained pullback. Option C is that we have another sharp correction down to 45,000 and then bounce very violently back to the upside. I'd say option B and C are about the same sort of probability. Option A is currently by far the most likely for me, but of course, time will tell, and we'll continue to watch the market and let price dictate to us what is going on. One more reason why I believe is option A, and that we have another big leg to put into the upside, is that I'm seeing Chainlink and Ethereum outperform Bitcoin. What usually happens if we're going into the mid-cycle bear market is that Bitcoin starts to outperform altcoins quite significantly. And I'm just not seeing that at the moment. Of course, I'm seeing smaller altcoins, like I'm just looking down here, 1 inch down 21%. But the large caps, Binance is similar to Bitcoin, and Ethereum and Chainlink are outperforming Bitcoin. I wouldn't be expecting to see that if we were ready to put in that big sharp correction. I would expect Bitcoin to be outperforming altcoins. So this is just showing it on the halving tracker. I still expect we'll have this deep correction, but I don't expect it yet. I think we've got one more leg to put in. But regardless, that is the detail. As long as you're well positioned mentally and practically, what we're looking at is September. So whether we have this steep correction now or we have it a bit later, we are looking for September. We're looking, currently, we're tracking ahead of the green line. Even if we just match the green line, that's bringing us somewhere around 280,000. That would be in line with the last cycle. But of course, we're quite significantly ahead of it at the moment, which would put us at $300,000 plus. And also, regardless of what correction we're having right now and exactly where we are, what we know is that in a bull market, after every correction, we have these massive moves to the upside. This was in 2017, and the returns after the 30% pullbacks, 138%, 106%, 211%, 164%, 117%, and then finally the blow off top, 238%. We still have those moves to look forward to. How do we know that we haven't put in the top yet and that we're working our way down for the bear market? We just haven't seen this price action. This is the 1 week view in 2017, and even before that, so the last couple of months going into the cycle peak, we have these massive moves to the upside. And if we look at that on the weekly view in 2017, these weekly moves heading up to the peak in 2017, this was 35%, 16%, 21%, 30%, and then 29%. That's the sort of price action we're looking for to dictate to us that we're at that peak. And as you can see, we've been heading sideways for the past 4 or 5 weeks. That's certainly no indication that we've put in a blow off top. You don't usually see sideways movement at the top. The top is usually a moment in time and then we capitulate to the downside. You know, could this have been the top? These were nice weekly moves, 18%, but no, we need more in a row, bigger moves. That 18 will end up being 20, 25, 30 or more. And like I said, when it's the actual top, you will see the next red candle, as we saw in 2017, like this. The first red candle to the downside, 25% down, followed very quickly by 15%, 15%, 20%. It doesn't look like this at the moment. That is what we expect it to look like. That is also what happened in 2013. Let me just find that very quickly. And this is 2013, where again, you can see these huge, huge candles to the upside and then huge candles to the downside. So no indication yet it's the cycle peak. We do need to keep watching to figure out exactly where we are in the bull market, but we know regardless, as long as we know to buy and hold and not to make the mistake and sell on any of these corrections, then we are going to be very, very, very well positioned for the cycle peak later in the year. So I hope you've all had a wonderful weekend, and I will catch up with you on tomorrow's Ask Me Anything. If you haven't already downloaded the Bitcoin playbook, and the link is in the description. And once you've done that, you'll be on the email list and you'll receive the link to the Ask Me Anything as well. So take care, and I'll see you tomorrow.